What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Thursday night GTii technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab, in Discord. With that said, let's dive right in. You guys, I'm still not feeling all the way good. I still have, my voice is still entirely gone, so please bear with me if it starts going away. Okay, so let's go ahead and look at this chart right here. We are looking at GTii on the 4-hour chart, and we had mentioned a potential right angle triangle here. So this does have two price objectives for us to review, and you can take a trend line from the hypotenuse of the triangle down to the lowest point of that triangle and apply this to where we could look at a breakout. So let's look at the downside first. Usually these triangles tend to realize when they're about 70 to 75% to the apex of the triangle. So now looking at the bearish case, we are looking at a suggestion of very much in confluence with this candle and this wick low. So it would be the opening of this candle and the wick low of this candle is a suggestion. You can see right over there. It's like this. So now to the bullish case, actually, let's go ahead and clone this trend line so that we can have it both to the upside. So if we were to have our test to the upside, we are looking at a test of about $4.80, which does also share confluence with many candles in that area too. Let's go ahead and put a trend line right over there and just see. So we do have the high of this candle here. We do have the opening real close to this. We have resistance with this candle. Plenty of candles right here touching right at that line. So we do have confluent targets here within the bearish and the bullish outlook of this formation itself. Now, we do need more validation and more clarification than just formation, right? So we are within a descending channel. The descending channel is a bullish structure all on its own. However, we do have only, let's see, 1 and 2 touches. Now, if we were to make a break to the third resistance test or the touch of this, the resistance of the descending channel, we could face a larger capitulation event down to the downside so that we can actually attempt out a true breakout on test number 4. Usually these formations do not realize to the upside until the 4th or 5th breakout. So now that you know that we're on the third, please brace yourself, make sure to watch your longs. Also understand that I am not a financial advisor. Please take whatever I do show within these videos as a form of entertainment. I need you guys to do your own DD and we'll be okay. So now let's take some fib levels from let's see. We'll take it from this swing high to the swing low, right at that candle, the red candle right here. So let's take a look at, well, actually, you know what? Why don't we take a fib from the entire triangle? So we'll take it from there and we'll take it from the lowest point of the triangle, which would be right about here. Okay, so the bullish case scenario has some confluence with our one spot 272 at $4.91. The $4.79 is the price objective suggestion. And now if we take an inverse fib from that entire range, of course, we can actually see some downside targets as well. So let's go ahead and take it to the top of the triangle and see just what we have. So now in the downside, we do have, oh man, that's almost to the penny. Okay, so let's draw a trend line here. And you can see that the one spot 618 at the downside is actually at $2.11. This is actually very, very interesting that it would land right within the golden ratio, the golden mean. So we do have to respect the suggestion that this is giving us. If I'm looking at this correctly, there could be the potential to where we do break out of this triangle, test our resistance for the third time, and then face that larger capitulation event that I am talking to you about, and use the one spot 618 as a form of support, but we do have also 192 at the 4 spot 618 from the breakout of this symmetrical triangle. So we did break up to the upside. We went all the way up to this little area and we capitulated all the way down to test right at that 4 spot 618 smaller time frame fib. So we do have to appreciate the market geometry in play within GTii. So now let's look at the next chart and see what we have. This is a descending broadening wedge. We were looking at this for some time now, and we did notice that we were printing another symmetrical triangle within the 1 hour chart, and we were looking for a breakout at about here, but we did get it on this following space for the 1 hour candle. So now we did actually, it looks like we did not reach our 1 spot 618, but it since failed short. We did break out of it, and now these candles coming right back down to test. This was the support of the triangle testing there, and of course it's not a valid support, so we came back down and tested once again, or actually for the first time we are now back to test our descending broadening wedge newly converted resistance into now support. So there is that, which is good for GTii. And this formation also has a bullish outlook or a trend reversal of sorts. So you can see that the price objective for this formation is actually $4.58. That's usually where the trade likes to take this price objective for these formations, and the target or the price objective of 458 just so happens to be 10 cents away from the 2 spot 618. So it's very much a possibility for us to reach these levels right up here. Given that we do have a good news catalyst, or we do have a reversal in the markets, but the markets are experiencing some pressures due to war, due to lots of economical issues. And also we do have to keep in mind that the FOMC minutes is coming on the 23rd, which I believe is next Wednesday. So that's going to present some sideways trading once again. Okay, so now let's move on to the next chart and see what we have for GTii. So this is the statistical side of GTii's analysis. And what you're looking at here, new viewers, new listeners, you're looking at volatility represented by this indicator, BBWP. BBWP and volatility are direction neutral, so we would have to pair it with a momentum oscillator or a momentum indicator, similarly to this one, in order for us to gauge that bias in direction. Now, we have taken note of every iteration where we have retraced or started a contraction phase to the downside, based on every single time we have touched or passed what I consider to be critical volatility, which is anything above this red line to be above the 90 percentile. So every single iteration I have taken note of by hand throughout the trading history of GTii. We are looking at it on the 3-day chart, so this is a macro perspective. And based on those iterations, the criteria for a backtest was the duration of the iteration, the upside thrust based on the iteration, and the times that the iteration has guessed the upside correctly versus incorrectly, which are shown by these green and red lines. Now, the statistics that came back are very interesting. We do have a backtest of only the stochastic momentum, since the momentum oscillator is the reason that gives us, or is the bias for our direction. We backtested this alone. So based on 11 total iterations throughout the trading history of GTii, the momentum oscillator got 10 out of those 11 correct to the upside. So that gives us a 90% accuracy for the momentum oscillator particularly. Now for the volatility versus momentum profile backtest, out of the 11 iterations, we have 7 that were correctly guessed to the upside. That gives us an average upside accuracy of 63%, with an average upside thrust of a massive 3,200% over the span of just over a month. This is proof of work. Now, we are looking at it in the macro perspective, and also remember that these are statistical metrics. They are not certainties by any means. So we need to make sure that we use these as a form for us to see possible or more probable targets on the way up. What I can say is that there are very interesting things within that 3,200% to the upside. If you take from the firing of the signal, which is right about here at $2.81, we take a measuring tool to the 3,200% to the upside, and then draw a trend line from this macro high to this macro high, you can see that the trend line lands right in confluence with that 3,200% upside thrust. And I can see a potential reversal from this touch, a massive reversal. And the reason why I can say that almost with confidence is only because we have built a bearish structure. This is an ascending channel within the 3-day, and we have, let's see, this is test number 1 of the resistance, test number 2 of the resistance, and usually test number 3 presents an impulsive move to the upside, followed by what could be the biggest capitulation event, for the ascending channel's structure or price action. Usually after that third touch, we face a larger capitulation event, and followed by an actual true test of a breakout on test number 4. So this is something that we do have to keep in mind, and since it is on a 3-day time frame, the chances of it hitting that type of movement, as I described, are greater. Greater time frames do carry more weight. As you get smaller in time frames, you start adding more grain. There starts to be more distortion, it's just too much information sometimes. So it's better to keep it simple sometimes when you're looking at overall movement. So what I'm looking at here is actually really good for GTii stock in general. And I imagine that they do have some good catalysts coming out. So anyway, the last chart is going to be the RSI. Now, also, I've made a drawing here to describe what my RSI properties are. And this is just so that I don't have to explain every single time I make a video. So this is for you new viewers, for the new listeners, for you to be able to see what I mean. So we're in the immediate short-term time frame, 30-minute RSI. We are looking slightly bearish. We are still technically within the shallow areas of the bear weakness percentile, which means we can be gravitated right up here. Excuse me. Into the bull weakness percentile. So and this can present a potential sideways trading, which is very much in accordance with what's happening for next Wednesday for the FOMC minutes. For the Fed will speak again regarding our PPI and CPI data that's come back, which has been very good. Now, let's move on to the buy hourly. So buy hourly is suggesting also some sideways trading with a slight downside on the RSI signal line. So there is the potential to where we can face some downside action or very slight pullback during the earlier session tomorrow. 6-hour RSI is dead to the right. So there's no bias in direction in this other than the fact that we are in the deep areas of the bear weakness percentile, and we can be likely to be gravitated right into bear strength percentile, but there is no bias in that direction. Okay, so now let's look at the daily RSI. Daily RSI is also suggesting a downside. However, it is within the shallow areas of the bear weakness percentile. We have been in this for quite some time, though. As you can see, the RSI signal line has been using the moving average as a form of a type of resistance. So there is the potential to where we can actually face some more resistance and continue some downside action, but it's not so, it's not so, it's not impulsive. It's not really suggesting an immediate downside. It's gradual. So this is likely a corrective move before us facing some upside. But anyway, you guys, I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord, on Twitter. I'll make sure to leave the links in the description below for you to consider joining the trading community, ARCa, in Discord. So I wish you well. I wish you a good night, and I will catch you at the bell mañana. Adios.